All right, welcome everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please type the number one in the chat box, let me know that you can. I would greatly appreciate it. For those of you that are following along with us on YouTube, go ahead and put it in the chat there and any questions you have, and our team will transfer those to me and we will get them answered. Thanks for that, Andrew. All right. Hey, Brenda, how are you? Thank you for your email again. Afternoon, Jim. Afternoon, Kevin. All right, let's go ahead and get my camera going here. I would just like to make sure one thing at a time works. It's just Zoom can play funny games. There we go. I'm back. All right. Well, once again, welcome everybody. It's funny. Someone asked me earlier. One of my team called me after we had a meeting this morning, which we normally do on a Monday, short meeting, and then they called me afterwards and said, "You seem to be in an exceptionally good mood. What's going on?" Which I don't know if that was a good thing or a bad thing, but the way they said it. But what's going on, folks? I'm just coming off of still a massive high on Friday from our Trader Super Summit that we did, which was for all three of our mastermind groups, Inner Circle Mastermind Group. And this year we invited a special one-time guest of Trading You to come in there, kind of wrap up our mastermind week, a little extra bonus for them. We had a great time. We've got individuals from Inner Circle that were commenting that they were invigorated and just, my head is full and there's so much information. It was a great class, good participation. So I am still so stoked about that. And am sorry about not getting out a Traders Intelligence report at that time. Literally, we finished Trader Super Summit at 4:01, and at 4:03, we are sitting in this office. And one other, my wife and I, with one other person, we were closing on a piece of property, which wound up taking us an hour and a half to get through. And they still did it wrong, but whole different story. So I had no time to get that done and off to the team that day to get it out. So sorry about that. Super Summit was often awesome. Yeah, I appreciate it, Kevin. I talked a lot in there. I wanted to do more breakout type stuff, which we never got a chance to do, just to get through all the material that I had for us there. And pretty much everything that was in there was brand spanking new. So I am stoked about it. So good. I'm glad to hear some good stuff back. Keep in mind as we get started, everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. So here's our agenda for today. We've got our follow us page. We'll go into today's trades. We'll look at economic reports. We'll look at a review of the market, upcoming future trainings, the weekly training topic, and then your stocks in review. So here is our follow us page. Go ahead and read that for a second. I'm going to open my window because it's way too warm in here. Give me a sec. All right. I've had enough of air conditioning this year. I'm tired of it. So if you're not following along, make sure you are, particularly on Trading Post. And if you drop that in, Trading Post is our newsletter that we put out every day. Hits the market as before it opens. It's got a couple of trading ideas for the day in there, so well worth your time of checking it out. Let's go look at today's trades. What trades did you all do? Drop those trades in. They could be trades from today. They could be trades from the end of last week. That's fine. Funded, not funded, I really don't care. Made money, broke even, lost money, I really don't care. I really just want to see what you guys are up to. I'll share what I've been doing as well. Right? Let's see. So Trip said scalps on AMD. It's a new one for you, Trip. AMD. 19.5% in 6 minutes. Amazon 20.8% in 4 minutes. Very nice. Brendan, it's funny. I didn't look at the totals. I did look at the trade. This was from Brenda. So this is on SPY. She bought at 10.58 today. It was the 662 call. She bought them at $2.16. She sold them at 10:40, so 12-ish minutes later at 2:52, right? So overall, not too shabby. That's 26, 36, 46, 30, 36 cents. 1,000 contracts is what she had open on there. Again, funded, not funded. Everything's not funded as far as I'm concerned. Brenda said on SPY, 36 grand today in 12 minutes. So great job, Brenda. Jim, very nice. On SPXW trades, which are they all calls? Okay. So 7.7%, 7.6%, 8.9, 86.6, 69.6%. Spent $6,730, made $2,110 or a 31.3% rate of return. So very, very, very nice job. Congrats on that, Jim. So much. Let's see. Guys, these are the ones from last week. I got nothing off today. Actually, that's not true. We did get one. We did get one. It was an aggressive trade. Nothing was in our favor. If you look at Tesla, we've had this great run. His buyout. I think this was the day this was the day he listed $1 billion spot. Right, gap pulled back, moved up, retested, bounced. Today we gapped up, and using a technique that is part of the switchback trade. There's an aggressive entry switchback trade in there. And using that, we got a gap up, no fib line, nothing near anything. We quickly, though, very quickly, if we look at a 5-minute chart, moved up and broke through our fib line. Right? No retreat at all here. We ran up, we closed, a little bit of pullback on the first 5-minute candle. We opened flat, ran up, never retreated, pulled back on the third candle. If we turn this into a 1-minute candle, let's get a little more time. You can see here's our run up, here's our close, here's our bounce. Off of that bounce, there was the entry. And as we failed off in here, so you're talking about being in this trade right about 438. We ran up to for 444. So 38, 41, 43, somewhere in there, getting at 38. You're out of 41 to 43, somewhere in that range on the highly aggressive entry or the using a micro day trading exit for it. So it was a great little setup there, but aggressive, not one that I use normally in pop. So not one that I'll be recording in pop because it's, again, too aggressive for that type or that style of trade, but still an opportunity to trade. Pop doesn't mean that that's the only way you can trade. It's just a way of trading, right? And then these are our trade setups from last week, from Tuesday, Wednesday, Thursday. You can see there was nothing on Wednesday, just 16 and 18 last week. So we got Coinbase, Costco, DoorDash. Finally, some redemption on DoorDash. We got a +2 and +7 on DoorDash. Right, so happy to see that. Which are right here. The one we've not had any luck with is Carvana. We've got only 2 trades on there on pop, and both of them have gone against us. So, but that's probably the only stock in our list of 20 that we've got negative numbers on. And then Eli Lilly. Lilly is an open trade right now. It is a swing trade. If we look at Lilly, let's put it in the background and pull this in front. So our last exit was on the 17th, which was here. So we were stopped out at this point. We've been stopped out, right? We still have over $4,000 on it, plus whatever we get on the last 2 contracts that are in there. So we're okay. Right? So, yes, congrats everyone for that. Tripp said last week did a SPY scalp between the Fed announcement and press conference, made 38.2%. What a number, Tripp. 38.2% on the retracement after the initial move. Nice. So he watched the initial move, retracement, 38.2%. Excellent. Good job, Tripp. Okay, let's go ahead and bring back in presentation, and let's go look at economic reports. So let's go to Forex Factory. Let's see. Mo, right there. Okay. Let me move some things around here. Put this one there, put this one here. Let me just start my drawing tools. Okay. So today, FOMC member Miran speaks. Yeah, I'm not too worried about that. 12 o'clock, right? Which has happened already now, so I don't really care. Tomorrow, 9:45 a.m. We've got two reports that are red, same report, but two that are red. We've got a time that the market is open. So keep in mind, if you are trading tomorrow and the market is open and you enter a trade, let me rephrase that. You enter a trade tomorrow before the announcement comes out, you've got to be careful about the announcement. That's all. Richmond manufacturing, it's not a big deal, right? But it is happening at 10:10, right around that 9:45. So you're going to want to pay attention. 12:35 is Powell speaking. I don't know if he's testifying somewhere or what that is. So I don't believe it's a press conference. On Wednesday, we got 10 a.m., but it is new home sales. I don't care. It's an orange folder. Here's the thing. Home sales have not taken off. Yes, we had our first rate cut. Ooh, we got our first rate cut. Okay. It isn't. I don't know if you noticed it, but the week before the rate cut, banks had dropped a fairly nice amount for interest rates already on mortgages, knowing they're going to be able to borrow money from the Fed for less. So they started to drop those rates. And the day they announced, I get an email every day that shows the current mortgage rates. The day they announced, mortgage rates from the average bank went back up, not to where they were, but higher than they were the day before, right? So buy on rumor, sell on fact, right? The fact is out. The news is out. The cut happened. On Thursday, we've got a lot of 8:30 reports. These are big reports, but it's pre-market. Unless you're doing a swing trade from the previous days or weeks, it's not really going to matter. You got a 10 a.m. report. I really don't care. It's existing home sales. They're not going to be up that much. Not yet. It's too fast. Core PCE is coming out on Friday. It is an important report, but it's not at the time of day that really matters. 10 o'clock, consumer sentiment. Big report. Let me rephrase that. It's a Fed report, which should mean something. But at this point, I don't think it means anything. And what I mean by that is I think the Fed is seeing the writing on the wall that they're not going to have a choice, as Powell said, potentially even two cuts this year, whether he does a half at one time, which I don't believe he will. I think a half just hurts his legacy because he knows he's not going to get put back in there again. I think a half just hurts his legacy of what they write about for him. He screwed up so much, he had to cut a half at the end, right? We waited so long to cut rates. And whether you think he's right or wrong, I don't really care. It's the way it's going to be perceived. Is if we didn't need a cut last month and now we need a half a point cut, we made a mistake somewhere. All right, we shouldn't be at a point where we get to that. So whether we are or aren't, I don't think he's going to let that get in his way. Consumer sentiment is the University of Michigan. Yeah, exactly, Trip. So I don't know if we're going to really see much come from it at all from the report. So we'll see, right? PCE is big, but again, Fed report, but not as important. Yeah, I don't think that's it, Brenda. I mean, look, the White House is screaming that they want lower rates. Well, Powell has made it very clear that he doesn't cower to the White House, and he shouldn't. It's an independent agency. No one should. It's no different than judicial being told by Congress you have to do this. No, we don't. We're judicial. We make the decision of what has to be done, not you. That's what judicial is about. And the likes, right? So now Congress can pass laws and they can be voted on and taken to court and all of that stuff. But I think Powell has just made it clear of his position of the model he is working with is too old, in my opinion. It's too old. And easily enough said, when we talk old models, here's the S&P. We're up today, 15, almost 16 points, all-time high. All-time high, 16 points up. Right? The VIX is up. Really? Why? I get it, it's small. I get it, we're low, but why? Well, because the VIX correlation to the S&P 500 is not there any longer the way it used to be. Still important, but nowhere near the level of what it used to be. I think it's more of a where I think you could look at VIX used to be, right on the playing field. It was they were that important. They were on the field. I think VIX is a 30,000 foot view now, personally. Um, Excuse me. Hmm. Wicked tickle in my throat there. So, all right. Market review. So let's go take a look. See then at the S&P. As I already stated, all-time high. I'm absolutely loving it. All-time. Well, we don't have a close yet, but if we close where we are, it'd be an all-time closing high because there's two different highs you're looking at. If you go to Friday, Friday we had an all-time high. We also had an all-time closing high. Right? Both of them are important numbers. Right? So it was a great little move there on Friday. All week. I mean, Friday, Thursday, Wednesday, Tuesday, Monday. So Monday we were up a little bit. Tuesday we were down. Wednesday was wicked whipsaw right down to that fib line, which had a confluence of that moving average, and then a great bounce off of there, and then into Thursday and Friday again, all-time highs both days, right? Which was outstanding. And then today we're at a new all-time high. So we're putting a constant stair step in. We could look at this as, just want to get the top. This would have been a swing high, and this would have been a new swing low. Okay, so we're still making higher highs and higher lows, right? Which is critically important. Tripp said, the economists that I follow have said for several years that the biggest problem with the prognostications is that we have no real models because we are in a completely new economic situation nationally and globally. There you go. And Tripp's getting it from the economists, the economic people that he follows. For me, one of my masterminds, a gentleman in there, we call him the economist, right? It's his jam. It's what he does. He loves that stuff. Me, I'm like in left field outer space, like I could care less. You're talking up here. After 5 minutes, the answer is yes. Okay, good. That's all I needed was the yes. Thank you. And said, well, when you take the valuations of the previous regime versus stop, just yes. Okay, beautiful. It's going to happen, not going to happen. Got it. Going to get the cut, not going to get the cut. We'll talk Fed in just a few minutes, but when we look at the S&P right now, guys, I'm going to back this up. We've got a fairly new fib draw, and this came out of Mastermind Week. Actually, I didn't even. It was in pop, but I did not say that we redrew it because we redrew it. We redrew it during the Mastermind Week. So it came off of this swing low on June 23rd, swing high of July 31st. Excuse me, in there. And the pullback came down to here. So that was our new fib. The pullback came down to that next day of August 1st. Okay. And we wind up with, I don't want to get rid of the old ABC pattern that's in there, but we wind up with, and look at the length of the line. See, this green line is really long. This purple line is really long. Those are the old ones. See how these lines are shorter? Here's the purple. It starts where the C is. That's how I know it lines up. This black line, or green line rather, is here. It's from this. So my ABC pattern, this 236, basically what that 236 tells me is once we make it through the 236, all hands are on deck. Go. It's okay to take directional trades bullish. We got through that 236 right there. Our very first target is the 618. And I'm not saying that means you go straight up to it, but that's the target. When you're looking at a longer term, where's my target position? 618 is the target position right here. Okay. So we're looking at that 618 level, which is just about a fibit of these two fib lines, the negative 136, almost, not quite, but almost. And then the one, and again, we're looking at the short one here, this one here, that is a 100% extension. What does that mean? Whatever the distance between here is, that's what we're looking at in here. Same distance. So if we use the dollar difference tool to measure the difference between these, and I'm not going to be perfect, and I'm not going to even attempt to be. That's close enough, whatever it is. I'm just going to duplicate the line, bring it the bottom off of the C, and you can see we come right where that green line is there. So that is whatever this distance was, 487 bars, $487 rather. That's $487 off of this level up is where that 66.9648 is. All right. So that's our next upside that we're looking for. Now, with that being said, let me get rid of those Mistakes on there. Zoom in a little bit. Okay. So what are we looking at then? Right? We've now broken out of the zero line or the one line, right? On the top, we've got our negative 272, our negative 318, 382. And we're coming up to the negative 618. We have a tremendous amount of resistance above our head right now. We've got this previous one, or this one right here, rather, not previous one. This one right here is the new one, right? So that's what we're working off of, the new ABC that's drawn right there, right? And you can see that is 66.96, okay? From there, we've got 67.26. From there, we've got 67.65, all right? You've got fairly equal distance between here, 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 and here. Not exact, but very close, the distance between those sublines. Those are those equal lanes on a highway, right, that Ryan talks about. So we've got a lot of short-term resistances up above our head. And every one of them has a great importance to it. If we back this up so we could see the fib levels at this point, right? So we back this up. What are we looking at here? Let me grab the red pen. So this level we just broke through is the negative 5. This right here is a 100% extension. That's a hugely important level. This is a negative 618. Very valuable line. 618 is the most, anything with a 618 in it is the most important line that's on your screen. 618, negative 618, negative 1.618, it doesn't matter. If it's 618, it's important. Okay? And then this 6765 is a pure fib number. These super fibs or major fib levels, super fibs, have been instrumental as targets, supports, resistance, whatever you want to deem it as at that point. They've been extremely important in all technical analysis phases, where stocks tend to move to those lines. And if you're looking at it saying, yeah, we haven't been there yet, how can you tell me that? Well, it's not because of that. Right? Right here, we have a 54.73, and then there's a 41.81 down below, which is another black line right here. Okay. Yeah, Rob, see, there's no importance. We haven't been to them in a long time. I agree. We haven't. We go back here, and here is our, and we're hitting from the top, so we've already broken through, but here is our center line, the 54.73. Right? Here's our 41.81. We've broken through it already, so you can't see it. This is one of the times that 41.81 became critical. If we start stretching out, right, it was a major resistance after we had started a very choppy move up, pulled back, had a great run up, had a strong pullback in there, pullback to the point of we went back to bearish bias. We broke up, vacillated for a month, broke out, retested, and bounced, and that was the start of our move up. This pullback right here, right, we got down, let's bring it in a little bit. We got down to the 41.81 level. We moved down 1-2 days. We took our bounce from there. That's where our fib actually got drawn from. New fib got drawn from at that point. Okay. And gave us a great move. This catalyst gave us our next fib level off of this 41.81 level. Right. So critically important levels that we've got coming up above our heads. The bad thing is they're very close. So will you make it 2 levels at one time, one day meeting? I don't know, maybe. But I don't want to see that, preferably. I would rather see slow and steady. I would rather see us get to a point that we move up a little bit, we back off. We move up a little bit, we back off. This gives us a stronger run. This big, give me all of it now. Let's cut open the golden goose and get all the golden eggs at one time. You know the remainder of that story, right? They killed the golden goose that laid the eggs, right? And they weren't in there. They just one new one every day, right? No different here, right? Each level is a different important level of importance, but every one of them are. If we just try to get it all at once, we're going to lose it all. We're going to fail. The market's going to fall apart, back up, and then you'll see different stories coming out on different sides of the aisle of it's your fault, right? Government shutdowns are going to be blamed. You watch, there's going to be a million things that are going to be blamed towards this. Read between the lines, look what's actually going on. Make your decision and then make your trade based on that. But we've got some opportunities up ahead. Will the potential government shutdown be a problem? Yes, it will be. It will be. Because it's the end of the world. You'll hear threats that Social Security checks aren't going to go out, which they are, right? No one's ever stopped the Social Security check from going out. What do they call them? Essential workers, right? Social Security is an essential function. Someone's got to pay checks or else nobody's paying their bills, right? Many of these people that get Social Security checks rely on it week after week, month after month. So overall, we've got great opportunities. We are in a bullish bias. We are at a rank of 3. We are way above our moving averages there. I'd like to see more of a pullback. This was a great one last week on Wednesday. But man, I would love to see more of that happen where we get, vacillate a couple of days here. Slow down. I don't need to hit new highs every day. If I can get once or twice a week, I'd be tickled pink. I'd rather have 3 or 4 days we're pulling back, getting to a key level and bouncing again. So it's 2 steps forward, 1 step back, 2 steps forward, 1 step back. That's how you're making money. It's not 20 steps forward and then 50 steps back. That's what's going to happen if we continue to get this big push to the upside. Someone's going to wake up one day and go, man, it is way too flipping high right now. No, I'm not doing this. I'm out. And that's when we see the market tend to fall apart. If we look at the VIX at fear, as I said, the correlation is definitely weaning. There's not as much value in correlation any longer of VIX versus the S&P. Right? We've been low and channeling since end of July. Right? Mid-July, end of July, somewhere in there. Been in this sideways yuck. You can't read too much into it. We are up a little bit, but we're so low at 15 and 3/4, 1579. We are so super low right now. But keep your eye on VIX and look for correlation. Do you see the market going up and the VIX going down? There are days, but not always. Was Friday an overreaction on the all-time high we had on the S&P? Maybe, but I just don't see it. I don't see it. So, exactly. Brenda said, then you just buy puts until it starts going up again. Exactly, Brenda. 100% spot on. Let's see. Tripp said, could rising VIX when SPX also rises be the market makers feeling like long-tailed cats in a room full of rocking chairs? It very well may be, Tripp. It's very possible. But the days of old where I could look at VIX and trade very heavily off the signal on VIX is not the VIX I see today. But yeah, it could be the uncertainty causing some of it, without a doubt. Jeff said, good time for VIX 2 to 3 weeks out. Yeah, it might be, Jeff. Jim said, daily charts on SPX and SPY last 3 days do not look the same, but the SPY is 1/10 of the S&P 500. Yes. We'll take a look at that after. But yeah, so as far as markets go, I like what we see. I do. The moves up. I just would like to see a little bit more pullbacks instead of that one big pullback day. I'd rather have us kind of bouncing around a little bit for 2 or 3 days, make trading a little tougher, make people a little more nervous. And when I say make people a little bit more nervous, guys, if we have a market like we do right now, and S&P 500, and for 2 or 3 days, we start going sideways, we break down, we start pulling back towards the 8, my phone will blow up. Oh my God, oh my God, oh my God. What do I do? Is the world coming to an end? Right? And I love those messages. I love the individuals to death. But the fear, because the market is doing what's supposed to be done, is where the problem lies. Right? Too many individuals just believe the market's meant to just go straight up and that's the only way you can make money on it. It's not. I would rather have that stair step effect. Go up, pull back, go up, pull back, go up, pull back. Just as long as your highs are higher highs and your lows are higher lows, that's all I care about. Just keep giving me that and give me somewhere to buy. Right now, anything I buy is a crapshoot. I'm at a rank of 3, nowhere near a moving average, very difficult to get back to. Could I pull back or wait for the pullback to there? Yeah, but I'm not going to try to call it. And by the time it pulls back here, we're going to be down here with the moving average. So I'd rather slow down a little bit on price, moving averages catch up, flatten off, right? 2, 3, 4 days in, flatten off, and then get a retest of a fib level and a bounce. Even if the moving average is not right there, it's closer than it is today. Yeah, there's a confluence, but what the hell good is that confluence down here if I bounce off this line? It's not. Right? So give me some sideways motion would definitely be my choice of how I'd like to see the markets go. All right. Presentation. All right. So we've got upcoming workshops. We've got Inner Circle is the 22nd. That's tonight. 29th is of September. Those two, 7 p.m. Mastermind group is tomorrow. Guys, I don't know if the email went out or not yet. Tomorrow is core training, which means it's 2-hour training tomorrow. I will be teaching that class tomorrow. And what does 2 hours mean? It could be an hour and 45 minutes. It could be 2 hours and 15 minutes. It's whatever we take to finish up a section where we can make a clean break and we pick up the balance of it the following week. Monster Market Movers, that's on the 25th, which is Thursday, I believe. Yeah, Thursday. Trading You is coming up on this. Well, now we're in October, the 6th and the 8th. Yeah, we've got more stuff before then, but the Q&A is what's the covered call. Power Option Plays covered call, Immunity Think Tank, all on regular schedule, as is Power Hour and Trading Coaches Playbook. And then starting today, 8 p.m., the Spread Spectrum. So Andrew, can you drop that link in there? There you go. Just as I said it, hit the chat box. Go ahead and click on that page and go ahead and get yourself registered, guys. You will be blown away by what you're able to do with as little time as you're able to invest on trade setups like this. So don't miss out on it. All right. And weekly training topic. Drum roll, please. What is the Fed's next step? So if we look at we just had the quarter point drop, right? We just had the quarter point drop. Let me just grab. I thought I had it open. I did not. Oh, there we go. It was already there. All right. So we're looking at October 29th. So there's no meeting in September, right? October 29th, then none in November, then in December is the next one, okay? October 29th, there is a 89.8% chance of a quarter point cut. 89, we'll call it 90% chance of an 1/4 point cut, okay? So how do you read this chart? Brendan, maybe what I'll do one day is I'll put a little training together for it, and we'll do that as our training topic of reading it. So, but right now, this tells you right here, Brendan, see this quarter point basis drop here, that 25 difference, there's an 89% chance of that drop. There's a 10% chance that we're going to remain the same, 400 to 425. Right? Current target is 400 to 425. So there's a 10% chance we're going to stay there. There's an 89% chance we're going to drop by a quarter point. Okay? Inside of there. And if you go down and look here, it shows that there's only a 0% chance of a half point cut. All right? But I'll do a little bit more in-depth on it, for this training one day. But basically, we're going to see the quarter point cut. So what is that doing? First off, remember, I said the words already once today. Buy on rumor, sell on fact or on news. The rumor is out. We're going to see a quarter point hike. Drop. My apologies. Quarter point drop. Right? The fact is, on whatever the date is, the 29th of October, the Fed announces a quarter point drop or not. That's fact. Right? Now, you could buy a position before. in anticipation of the move up because of that. And that's great and fine and good. And then try to get out of it after the announcement comes out. That's great and fine and good. But remember, it's not per se the cut that's causing the markets to move. It's not. It's the outward or further or future looking statement that the Fed is giving. That is where a lot of this is going to come down to. With Powell getting ready to his term being up, you're going to have some individuals that would like to take that position. So I think you're going to see the Fed get a little more vocal, especially this round, a little more vocal on their position of this is what we should be doing, giving their opinions. So when that time comes, possibly one of them considered. Exactly, Brenda. That quarter point right now, you said the right words. It's baked in already. Traders are anticipating this move already. Now, we don't get a quarter point drop. You're going to see a serious correction in market if we didn't get a quarter point drop. We get a half point drop when there's no chance right now of a half point drop. We get a half point drop. You can type it in if you want, but what does that half point drop tell the trading world, tell the investment world, tell the business world? What does the American popular people, what does that half point drop in October if they did that? Right here stating that there's a 90% chance of a quarter point and no percent chance of a half point. What is a half point drop? If it happens, what is that telling the world? Yeah, so you guys are being very faithful. Try like Trip's answer. It's all hieroglyphics. It's $ pound, dot, 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 dot. Can't say the word, right? We were wrong and behind. They're worried. It's messed up. The economy is in trouble. Barry, you're on the right track. You're all there, right? You all got the right answer there. Different words, but you're there, right? The first thing is the world looks to the U.S. for that leadership, and that leadership has been tainted in the last couple of years to where the U.S. is not the 800-pound gorilla anymore. They've lost some weight. All right, maybe they got 450 pounds on them. They're not 800 pounds anymore, right? There are countries or businesses now that are being forced to clear through their dollar through China as a clearing entity instead of the U.S. because the U.S. makes about 4% on every dollar, every $100 the U.S. makes $4, right? So if you want to change from Russian dollars to Chinese dollars, you do that through the U.S. We get paid $4 for every $100 you do, 4%, right? And that's U.S. profit. And we know, and the economists know that a lot of that's going to go away. And that's why this fight to win on crypto, we need to have a stake in that game quickly, because that's where some of that can come back to us is there. It's not going to happen with gold. It's not going to happen with clearing on the dollar, but it is going to happen with an international currency that is known worldwide. Right? Like a Bitcoin is right now. Bitcoin won't be it. There's not enough of it. It won't be it. It's not the right model anyway. But when we look at the movements that have taken place or are taking place, we get that quarter point drop. We're going to see a little bit of hesitation around it. Some people are going to like it. That quarter point drop happens 2 o'clock. You're going to see some traders go after the bullish side, some go after the bearish side. And the smart individuals are sitting back there like this. And they're waiting for the 2:30 announcement from Powell. And they're waiting to see what Powell has to say. We are more hawkish. We're more aggressive. We're more dovish. We're going to maintain rates. We're cautiously optimistic. Whatever the words are going to be, and then the questions, of course, that come out. Whatever those words are that he uses is going to drive what happens the rest of that day, right? And then into the next trading days, okay? So we've got to be a little bit on the cautious side. So when it comes to Fed Day, I'll give you an example of how aggressive it is. Many of you are aware Brandon Wendell has his SPX alerts that he sends out. Brandon's one of our coaches, right? That he sends out daily of what's going on. When it comes to Fed Day, you normally get a message that says, it's Fed Day today, too aggressive, we're not going to be trading. Or he might wait until afterwards, depending on what it is. But usually at that point, a lot of the volatility gets sucked back out on that type of day. So if he doesn't see the premium, it just becomes a no trade type day. And that's okay. I love waking up and realizing that today's the day off and I get to go do something else, right? I don't have to be around. Okay. Wonderful. Beautiful. Um, so when we look at the numbers and we look at the potential of the announcement and what's going to happen, there's going to be some craziness happening around the 2 o'clock, and then the 2:30, because it's a press conference and it's going to be a continuous answers. Until that's over and done and someone can decipher that was good, that was bad, you may get a bunch of whipsaw. Good traders are going to be in there trading it. Like Tripp said, he traded between that last week, right? At the last update. He traded in between there, between the 2 and 2:30 report, right? Tripp's a good trader. He knows his stuff. He's got a very specific trade setup that he used inside of there on SPY. For most of you, you will be better off to back away, let the professionals do their thing, and that's Powell and Goldman Sachs. Let them do their thing and pick it up again the next day. If you got some crazy, stupid spending money that you don't care, it's burning a hole in your pocket, you just want to gamble with that, go for it, small amount. But otherwise, you're not picking out the one nugget in there that's going to force the market to go exponentially higher or lower over the next couple of days or weeks. It doesn't exist that way for most individuals to grab, right? It usually takes some more information than that. So when we look at the Fed, what do we do? Guys, my personal opinion is we see 2 1/4 point cuts this year. That's my personal opinion. We see 2 1/4 point cuts. I think they'll reevaluate by the time they get to that third one. But I believe personally that to get us where we need to be, it's going to be 5 or 6 cuts in total. So we just had one. I think we're going to need 5 or 6 cuts. That 6 cuts gives us a 1.5. 5 cuts gives us 1 1/4 points down from where we started, which was a 1/4 point higher than we are today. Okay. But from the August meeting or September meeting, I guess, but from the September meeting, from that September meeting, from the September meeting, including that one, 5 to 6 cuts in total is what I think we're going to wind up. And I think that happens by the first half of next year. All right. Let's see. Brenda said 6 cuts by end of next year. Possibly. Well, think of a dove. Brenda said dovish and hawkish. Think of a dove and think of a hawk. Brenda, a dove, right? Very fragile. A hawk, aggressive, right? So we're being aggressive right now, or we're being cautious right now. It's Fed speak. It's Fed speak. Okay. All right. Bueno. So what stocks do you want me to look at, guys? Let's go ahead and do that. Let's drop those candidates in because that's where we are at up to this point. Aha, Dennis, interesting one. GLD. I just had CNBC on. It's actually still on in the background there. It's just muted right now. And it says GLD surpassed SPX so far for this year. And I'm not surprised. I mean, the S&P has done well. Gold has been on an absolute tear. I think there is, remember, gold has always been a fear type position. Markets are going crazy, go buy gold. There's safety and security inside of gold. Go buy gold. I get that. The problem we're running into is called cryptocurrencies. And cryptocurrencies put a damper on what else people are investing in. So if I go over to, I've got a Robinhood account. Let's see. Bitcoin is down to 113 today. I saw it at almost 116. I think it was over the weekend. It's 113 right now, 113,000 right now. That's definitely throwing a monkey wrench into everything, right? But we look at GLD, right? Good fib here. Very good fib on GLD. Nothing yet that says we have to redraw the fibs. Now, there are some different rules to it. If I look at the move that's in here, if we get a move bigger than this, it's time to redraw. Well, if I go from this low to this high, because that would be my only pullback, and that would really be here to this high, I've got $45 here, $37 here. This one is not bigger, so there's nothing to redraw. We haven't violated the negative 618. There's no reason yet to redraw. Okay. So what does that tell me then? All right, let's open this up. Actually, let's do this. Let me switch this over. All right. Just want to be able to see the Fibit. Got a little smaller. So $7.42. So 335 to 345, that's $10. I need to split that level in half. So I need multiple splits. I'm going to need a negative 136 in here. Right? I'm going to need a negative 5. And we're going to need a negative 809. Actually, that may not be enough. Let's see. Let's just add a negative 809 and see what we wind up with. For some reason, the maths is not working in my head. $45 to 54 is 9. We're at 7. Yeah, so that's not going to work. So we're going to take that negative 809 out. And we're going to add in manually. We're going to split it. $45 to 54 is $9. That's still too much. Going to put in a 25 and a 75. So we've got to split them in half again. We need more. We need Fibits of Fibits, which I'm not a fan of, but it's what we've gotten right now. So Brenda, when it comes to the value of gold coins, there's some differences in there. It's the value of the gold is important itself, but the individual coin that you're looking at might have other value to it. So if it's a 1 ounce gold coin, it's valued at what 1 ounce of gold is worth. That's the usually the offer, right? What they'll pay you for it. What they'll buy it from you for. And it's same with silver. Same with the silver coin, right? Silver's gone up nicely, not as nice as gold, but silver has gone up nicely also. I own a lot of silver, some gold, but a lot of silver. Um, so, but you could have a coin that was minted in 1947 that's got an S mint on it for San Francisco or whatever it was, and that S of a 1947 has, there's only 7 of them left in existence, and that has now become a very valuable coin, right? If it's an actual coin. When you get to coins from other countries and so forth, caution in there. I had someone buy coins that were minted to other countries, older coins, and found out it was junk that the coins were made from. So you just got to be careful. Right. Silver or gold rounds are the spot value, Amelia said. Yes. Amelia and I have had very long conversations about gold and silver, even to the point where she just found some older silver coins and we were talking about it. Right. She sent me a silver coin one day and said, "Here, I found this. I thought you'd like it." So, but it is the spot price. And then the rounds are just, if you're buying it, it's 1 ounce of round, 1 ounce round of gold or of silver. It doesn't have any mint on it or any designation on it. It's just the value of the metal itself, right? And there's a bid-ask spread, just like there is in the stock market, because the dealer has to make their side. If the coin is worth $2,000, just to make a number up, you can't buy it for $2,000 and then they buy it from you for $2,000. There's got to be a difference in there, right? How do they make their profit? Amelia said numismatic value can be valuable of minted coins. Round coins do not need them to be assessed when you sell them. Exactly. Huh. Trip said I have a 1 ounce silver coin with a bear on one side and a bull on the other. So kind of like that. This is a very, I should probably clean this thing up. This is the bull. I don't, are you guys even see it though? I mean, it's dirty. No? Okay. Yeah, you got to be careful with bars. Exactly. But yep, I keep it right here, Trip. It's a regular play toy for me on the desk, right? But I keep it out, which is why it's as dirty as it is. It gets touched all the time. Um, yeah, bull or bad. It's kind of a heads I win, tails you lose type thing for me. So when we go back to this on gold, GLD, I'd love to see the pullback to the 340 level. Don't know if we'll get it or not, right? If we break out of the 345, retest and bounce, 350 is resistance. Yeah, cleaning it can devalue it and damage it. You know, what I've done in past with it less is number two pencil erasers, clean, brand new pencil erasers. I don't think this is not, and again, this is a round, right? It's not a coin. Someone made this up. It's a round. So, um, but I should try. But you're right. Clean, very careful putting caustic chemicals on coins. Round, it's just round means like a coin. Think of a quarter, a dime, a penny that's in your pocket, your wallet, whatever. You have a quarter in your wallet, it's got a year on it, a date on it, a mint on it, something in there, right? A round is just, it's someone just dropped a 1 ounce thing of silver and said, here's your silver. That's it. So it's called a round. It's called a round, Brenda. There's no monetary value to you. You can't walk in the store. Listen, you can walk in the store with a $5 gold piece and say, I want to buy $5 worth of bread. And anybody that has a half a brain on them, zombie brained, is going to say, yes, thank you very much. Because you just gave them $5,000 or whatever it is for a $5 loaf of bread. Okay. But now, can I take a silver round that silver's trading at $28 an ounce and go into a store or go to somebody and say, hey, listen, I don't have any money, but I got a $28 round here. Can I get, will you sell me $23 worth of stuff? That's why I have silver. Silver, it's hard to cut off a 1/8, of a gold coin, right? I can get smaller denominations and worst case scenario with rounds, 1 ounce rounds. I got a $25 value that I'm giving away to buy something for $5, but I can't buy it any other way because the monetary system has completely fallen apart and I need something to buy it with. Yes, I am a prepper. All right. When it comes to stuff like that, I do believe that being prepared for it is a good thing. Um, so I'd like to see the pullback there down to that 340 level. That would be the ideal. Let it hover for a couple of days, get the eight to catch up. See, like it did here? Ideal. Look at this. I mean, we can't ask for a better setup. Look at this, Don, right? We had this nice runaway. We pulled back and we got right into it. If we get rid of the moving averages, we get rid of this day and look at where the moving average was from the day before where it closed. We were there. Now we were right at that fib level. And what happened? We gapped down, we stretched into it, we bounced. And then from there, we take up. That is the setup we're looking for, right? So do it again. I'd love to see the moving average, the stock pull back. The moving average is going to keep climbing because we've got a really nice run in here. Even though the stock is pulling back, GLD, we're going to get a continuation move of the 8 moving average. Get me the 8 a little bit closer. Say my 8 gets up in here, my stock comes down to here and bounces. Now I've got a confluence and I've got 2 check marks to say, yes, it's time to take that trade. All right, so I hope that helps, Don. Let me know. Okay. Brenda was asking for SPY and QQQ. And then we'll definitely get to that, Roman. Let's see. So on SPY, dot, 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 dot. All right. So so Brenda, we need to redraw on SPY like we did on SPX. Going to get rid of the arrow here. I always try to do all of this in pop, but we did this last week with Mastermind Week, and just it's got to match up. So let's see, 58 to 69, that's 11, 10. All right, so I'm going to need -5 in there. Let's see, 28 to 39, there's 11, 39 to 50. Okay, so I'm going to need all of them. I'm going to need the 118. Make it a 136, the 118. Okay. So we're in a bullish bias rank of 3 right now, Brenda. Pull back to the 664 level and bounce. Much better than the 666 level was there on the last one. Strong level. We've hit it. We hit it. And again, all-time high again today on it. So overall looking great there. All right. So that was on SPY, QQQ. Let's take a look at that one. Okay. Perfect. Yeah, we need to redraw this as well. Okay, so let's go get a new fib. Swing low, swing high. All right, 94 to 606 is 12. We're right on the cusp. I'm okay without having one in there right now, especially with the 100-point level there. We're good. So we're in the middle, right? Break the 606 or drop back to the 594. Either way, Brenda, I would need to see that happen before I look for any kind of directional trade. All right, Roman's asking for MSTR. All right, so we've already got a fib on there, Roman. Good fib. You're welcome, Brenda. Good fib. Pullback was okay. Yeah, just I'm thinking pure bear on this, Roman, with what it looks like. I mean, look at that hug on that 8 moving average. Quick bounce above, and we're there now. Break the 333, retest, fail. 310 is support. Lots of opportunity to the downside on this one, Roman. Lots. And we're a true bearish bias. So rock and roll, baby. You did a micro day trade on it. It was bearish for a good profit. Was that for today, Roman? Because you had a good break to the downside. Before lunch. Okay, excellent. Congrats on that. Good job. Hey guys, I'm telling you that the micro day trading strategy, if you're not trading it, I think you're making a mistake. Or at least learning that additional thing you could do. I made this. I got one more stock we're going to look at here, Boeing, but I made this distinction in our Trader Super Summit last week, where I said there's 3 different. I place a day trade. There are 3 different exits that I set myself up with. The very first exit is, what's my exit if the market just does what I want to do all day today? Where am I getting out? And that's going to be TSLA, let's say Tesla, right? So let's see, Coinbase. Just want something that's setting up a little bit better. All right. So let's say that market hasn't opened yet. We're going to take a bounce off of here if it does. I've got 347.38 is my resistance. Somewhere around 345 is going to be my target. That's it. The day just goes the way I want. We're just going to, slow and steady, quick little ups and downs, nice, cozy, moseying along type move to the upside. We're going to leave it go to the end of the day. Right? And that would be about 345, let's say. And then the micro day trading says, yeah. Something wacky has happened intraday. We had a quick move up. It starts pulling back. I don't like it. We got good possibility of profit in there. Lock it in before we lose the degradation of value because of volatility flip. So let's get out of that trade. So that's exit number 2. Exit number 3 says neither one happened and it's 3:45 p.m. Eastern time. Get out. I don't care what's going on. Get out. The end of the day, if it's a day trade, out 3:45 p.m. Eastern, I'm out. The latest. And if you don't know how to use your platform well, meaning, as far as I'm really not sure how to use Toswell, or you're not on your own internet, you're on some hotel somewhere that's kind of sketchy, do it at 3:30 instead of 3:45. Don't push it that close, right? But those three in that order: my full target, micro day trading when things are not going right, and a timed exit at 3:45 p.m. Eastern to say, that's it, day is over. I stretched out every last plug nickel I could. We're done. I'll call the broker to get you out. You could do that, Brenda. Absolutely. Sure. Hey, Andres. All right, Henry, let's go take a look at Big Airplane for you. All right, so it's in a bearish bias right now with a rank of 3, Henry. Oh, so now it's a rank of 2, all right, with where it is. I would need this to, in an ideal world, we vacillate around that 209.66 level for a couple of days and the 8 catches up. It fails, retests, and drop. Or, and if that happened, if, so let's do it this way, Henry. If the moving average comes in here and price winds up, let's say here, Henry, okay? Just as an example, right? I would take, and now what do we want to see happen? I want the stock to come down a little bit, retest, fail. That would be a 10 contract trade for me, or a full allotment. For you, a full allotment might be 2 contracts, 20 contracts. If you're Brenda, it's 1,000 contracts, right? Whatever it is, it's a full allotment trade, right? If, and I say if, that doesn't happen, but we break from where we are now, retest and fail, I'll take the same trade right there, but I'll only do 4 contracts or less. I'm doing a smaller amount of contracts because it is aggressive as an entry. There you go. Tripp said the earnings cycle starts in 3 weeks. Yeah, Roman said 13 rules and yeah, keep my focus on base hits, baby, over and over again. Yeah. Jim said, where do you learn micro day trading? Andrew, you have a link for the micro day trading stuff we did? I've only done one class on it. I'll never teach it again. It took me years of development. We gave it away when we did it live. Ridiculously low price. So if you're interested, Andrew dropped it in. If not, if you get a link for Jim on that, it would be great. But I think he can get it for you before we go there, Jim. Um, yeah, listen, guys, gals, ladies and gentlemen. I mean, bottom line is when it micro day trading, Andrew. The link for the micro day trading. Bottom line is you've got to be able to adjust when things change. If you get a batter that steps up to a plate and they start batting right-handed and they switch over to bat left-handed, there's a different pull of where that ball is going to go to, right? There's a different direction that ball is going to go when someone hits it, right? So you need to be able to adjust to what's going on, move a little further away from the base. You're bowling. I don't care what you do it with. You're bowling and you get on a lane and you throw the ball and you watch your hook in a couple of practice throws and you realize that you're 3 boards off from the center, and only bowlers know what I'm talking about. You're 3 boards off from hitting your spot for a strike. So what do? You adjust by 3 boards. You move over to make up for the too much oil, not enough oil, whatever it is on the lane, whatever's causing it, right? To make up for that, you do that there, okay? It's the same thing here. You've got to be able to adjust for how much oil is on the lane, right? And that oil could be political. It could be company driven. It could be pattern based. Just war, bad news, whatever it is, you've got to be able to adjust. Mr. Miyagi, best block, no be there, right? Just get out of the way. When the kick comes, the punch comes, get out of the way, right? The best block was not to be there when it happens. It's the same thing in the market. You've got to be able to adjust. We talk about tool belts or toolbox. My tool belt is filled with a plethora of different trading instruments, where not only just strategies, but tools like a micro day trading tool. Okay, they're tools, right? It's something that I can go, oh, I'll use that now, and add that to what I'm doing. All right. So with that, folks, we're done. Everybody have a great rest of your day. Andrew will drop that link in. If not, he'll send it out. Jim, you'll get it. He'll send it to you. If not, and you can always message if need be to support. So with that, everybody have a great rest of your day, and I will see you all at our next update. Take care, folks. See you soon.